Hi, and welcome to Investment Banking University, where we teach you how to become an investment banker. So, consistent with the investment banking book, we have developed a methodology on how to become an investment banker. And there are 11 steps, and we're going to go through those right now. And it starts with coverage. Coverage is associated with an investment banker's focus on a particular industry or subset or subvertical of an industry. Associated with that, we're going to be building an index of public companies within that industry or subvertical, and then generating various deliverables based upon that index and changes in the index. And what we're actually going to be tracking is we're going to be tracking changes in revenues, EBITDA, and multiples. And those are going to help our clients or prospective clients decide when to sell their companies or make an acquisition. And the next step in how to become an investment banker is we're going to actually do a target screen and origination based upon that target screen. So we are going to go into a proprietary database and screen for a level of revenues that is going to be consistent with our coverage. So if we're focusing on the middle market, we're going to be focusing on a certain level of company, maybe, for example, 100 million to 500 million in total enterprise value. And so we're going to have to determine what the revenues are going to be associated with that. We can do an implied multiple based upon the size of the revenues to get to the target enterprise value. After that, we're going to get in touch with our strategic and financial buyers and determine what their investment in corporate M&A mandates are. And then we're going to actually match targets that we've screened for with those mandates, both on the financial buyer side and on the corporate M&A side. After we do that, we are going to play an active role in leading the deal structuring and ultimately determining if it's going to be a minority or a majority buyout, and ultimately what multiple it's going to be at. So, for example, if it's in the lower middle market and it's a manufacturing company that is under 25 million in enterprise value, you're going to see a multiple typically in the 5 to 5.5 times range. Once you start getting over 25 million in enterprise value, the multiple or the EBITDA multiple actually moves to about 7 to 7.5 times. After we get the high level stuff figured out in terms of expectations of the multiple or the valuation of the company, we're going to coordinate buyer and seller meeting logistics. So we're going to first set up a phone call between the buyer and seller, and then we're going to coordinate the actual in-person meeting where they can sit down and negotiate exactly what's going to take place and how the transition is going to occur. Finally, we're initially going to get an understanding early on in the process of EBITDA and what that looks like, but we're going to formally create an adjusted EBITDA calculation, and then we're going to have an implied valuation based upon that, given a range of multiples that is expected by the target, and that are going to be most likely consistent with the investment in corporate M&A mandate. And then once that's acceptable, we're going to draft a purchase agreement. We're going to play a part in it. For larger transactions, we are typically going to see lawyers representing both the buyer and the seller, really structuring that purchase agreement. But the investment banker is going to play a very crucial role in shaping the initial structure of that. Once we have the purchase agreement received from the buyer to the seller, the investment banker is going to help do an offer analysis and ultimately see, is this consistent with the expectations from our seller. If it is, we're going to move forward with it, and then we're going to help set up the data room, and that requires us to obtain financials and a whole bunch of intellectual property associated with the business, any other contractual agreements that are from the business, and we're going to put that into a digital place. It's a data room, and most of those are digital at this point. And then ultimately, providing that everything checks out in due diligence, we're going to move to closing, and then we're going to make sure as investment bankers that we are on the flow of funds document, which ensures us getting paid. So that at a high level is how to become an investment banker. We go into much greater detail and actually work through the financial modeling and the valuation, as well as the target screen and origination, the mandate target matching, and we look at purchase agreements as well and understand those. So let's definitely have you go to investmentbankingu.com. That's investmentbankingu.com, and you can download the free book there. And then when you're ready, you can purchase the course. The course is online. It is also in a weekend format, as well as a month-long training, just depending on what your expectations are as to the detail of the course. So thank you.